Hello, Sense of Things. It is Jeff here once again with another episode of the Sense of Things, episode 10. Ron and I are going to focus a little bit of our time on what's going on in the markets. We're seeing a little bit of a move to the positive. We have some fun stuff to talk about today about summer because we're going into the summer months. And in addition to that, we do have a good conversation about AI and how its effects are starting to get out there into the investing community and why it may be a bit of a bubbly type of a situation. So stay tuned for the show. We can't wait to have you on here. Good morning, Sense of Things. It's Jeff and Ron here, and we're kicking off another episode. We're into the summer months now. How about that, Ron?
Yep, it's hot here. I'm sure it's hot by you.
Oof, I know we're supposed to hit, I think, 105, 111, and 107 in the
Your
next 3
temperatures are
days.
higher than ours, but
Yeah.
it's not getting steamy here, but you feel it in the afternoon, no doubt about it.
But yeah, it's walked out this morning and I actually had to take my pocket knife out and cut through the air to get to my vehicle. So yeah, I think we're like 100% humidity and 100 degrees. So it makes it miserable here.
Hey, better you than me, my man. I couldn't
At
do it.
least you have, at
Humidity is
least you
not
have
for me.
dry heat out there, right?
The humidity does kick up a little bit, but for the most part, you're talking under 20, under 10% most of the year. Last summer, I know it ticked up higher than that. Under 20, under 10% is livable and palatable.
I always remember the quote from, or the comedy routine from Gary Shandling. He was talking about because he grew up in Phoenix and yeah, people would always say, well, yeah, it's a dry heat. And he's like, yeah, so's an effing blowtorch too, but I don't want to put my face into that. It's like, I sit in my car and my hands would melt to the steering wheel.
Yeah, like I said, there were some days last year. I remember being out at Lake Havasu. It was 119 on that
God.
Friday, and they actually shut things down because things wouldn't operate at that level.
Oh,
So
great.
it was hot.
It is hot, but yeah, that's why they made air conditioning. So
Where do you want to start?
why don't we start this week? I figured with us kicking up the summer, I actually found some interesting, fun facts to talk about for the summer here and
Okay.
thinking about the summer months. Found a bunch of Guinness Book of World Records things, which I thought was pretty funny. So
Love
the
Guinness.
largest ice cream scoop ever weighed 3,010 pounds. It was to celebrate the 100th anniversary of Kemp's Dairy in Cedarburg, Wisconsin.
How big was the kid that ate it?
I don't know. There's a pretty fat one on the screen here, so it's got to be. And it looks like he was salivating there. So
You and me could have had a few pieces of
I
that.
and they're done that. Yeah. All right. So the first day of summer is called the summer solstice, which should be around June 21st,
Yeah.
and that leads us into the summer. And then, of course, the autumnal equinox is around September 22nd. Just a little bit about that. The longest barbecue ever in history by the Guinness Book of World Records was in Columbus, Georgia, and it set the record on April 27th, 2014. They grilled 1,000 hot dogs, 558 burgers, 526 sausages, 104 chicken pieces, or 200 ears of corn, and it lasted for 4 days.
How big was that kid that ate that?
Now, and here's the funny part about
Did he
that.
chase it with the ice cream?
They did chase it with the ice cream, and the event benefited the Juvenile Diabetes Research Foundation, which I think is really funny. It reminds me, I did an event in Irving when I was still with Fidelity, and we were supporting a local Indian community there, and they have a lot of diabetes in the Indian community because they eat like tons of sugar. And the event was sponsored by Krispy Kreme donuts, which I thought was just, guys, you're killing me here.
You can't get more sugar content in a food than Krispy Kreme donuts.
All right. So where did the dog days of summer come from? So I
Ooh, I
found this
don't know.
out.
That's a good question. I'm interested.
Dog days of summer got their name from Sirius, the dog star in the Canis Major constellation. You can view the star in July to August, the hottest days of the year. But what they said in here was, but beware, the ancient Greeks and Romans believed this period brought fevers and catastrophic happenings. So hopefully that does not roll over to the markets.
Gotcha. Okay.
Last but not least here, Americans eat 15 pounds of watermelon per year. Now, I'm not a watermelon fan, so
I haven't had
somebody
it in
else's
years. I love watermelon.
yeah, I'm not a fan, and so somebody else can take my 15 pounds. More than welcome.
That's a lot. That's a lot for watermelon. I haven't heard that before.
Yeah, I'm thinking to myself, 15 pounds, that's a lot of water too. It's whatever, but good God, that's a ton. That's like several watermelons each.
That's yeah. Just okay. Oh, hey, look. I don't know where what was that as of date where they got that number.
As of 2023, it was a current article
All right.
on this. So I guess
I don't
it
know what their
is.
sampling size was, but all right.
Their sampling size was about 15 pounds each.
That's insane.
How you feeling about the markets right now?
I got to tell you, it's been pleasantly surprising, but it's interesting looking at the economic numbers, which is not the market. We've gone over that several times. The economic numbers are getting worse and degrading, and meanwhile the market is going up.
Yeah.
I saw a stat last week that just the AI craze and hype, which that's really what it is at this point, is responsible for somewhere between 7 to 9% of the overall move in the last 4 to 5 months.
Yeah.
Which is very interesting because we've talked about this ad nauseum that the top 8 stocks is what's really pulling the market. The other 492 are now up for the year on average, but significantly less than the top 8 stocks. So
Certainly.
something's got to give. Debt ceilings resolved. The Fed paused this month, but did indicate that possibly 1 to 2 more hikes before the end of the year. And Powell was quite adamant about we don't see raising rates until maybe next year. I don't know what all these Fed futures are talking about, a possible rate decline or by the end of this year, early next year. I don't get it. Powell is very adamant about saying rates will stay higher for longer and may creep up a little bit. But meanwhile, the market is up again today.
Yeah. I think for a year we've just seen this nonstop onslaught of interest rate raise. And I personally think people this last month or so, the markets were starting to say, we think that they're going to stop. And I think just that stoppage alone will do that. But I think we continue to see degrades and we are seeing it. We can see that the interest rates are now having an effect on the market or on the
Credit
economy
tightening.
and the economic numbers pretty significantly. You're seeing higher unemployment happening. Definitely been watching that the manufacturing indices, and they've all been slowing down significantly. I guess my own little personal, I always say it's Jeff's look at the market from a personal level. The guy that was a meta recruiter that worked out of my office here actually got laid off. And so he was like one of their senior recruiters that they have and ran their recruiting department, and he got laid off. Now he's since gotten another job with another tech company. That tells me when you start cutting your recruiters out, that tells me that, all right, they're hunkering down for a little bit longer term at this point, at least on the tech side. Now, I don't know if we've started to see that on the broader market.
Well, I will tell you this, one of my litmus tests and indicators is I talk to a lot of HR people,
Yep.
not necessarily recruiters, but HR directors, CHROs, chief HR officers, and also people that are in the capital expenditure space where they're selling large pieces of equipment, and they have all seen a significant slowdown in the last 3 months.
Yeah.
And a lot of times those CapEx expenditures are 6, 9, and 12 months in the future, and they've seen many of those budgets either subside or go into what they like to call a cost containment mode, where they know they need to do it, and unless an emergency pops up, it's on hold.
Yeah.
So that to me is telling me a few things too about the second half of the year, or at least the last third of this year, once we get through the summer months. So we shall see.
Yeah. But I look at the market right now, and one of the things that we've been talking about is the breadth of the market.
Yes.
And this is not stinky breath. This is actually breadth of the market.
Could be stinky breath.
It could be, and sometimes it is. We are seeing more breadth across the market. So we've got more stocks that are at 52-week highs than have been in the S&P 500, which is a good sign.
Yes.
That tells me that things are starting to get away from that top companies. I worry about the AI craze very much like the dot-com craze that you and I remember from the early
Yeah.
2000s. Basically 98 to 2000, if you had .com behind your name of your company,
Right.
people would just invest in it whether it made money or not. And I think that same craze is happening right now with AI. There's a lot of AI companies out there. There's not a lot of AI companies that are making a lot of money off of their business yet.
No, but they've been around for a long time.
Oh
AI
yeah.
has been around for decades. The
Yeah.
fact that this is going on right now, there is so much air underneath
Mhm.
many of these stock prices that it's going to come down to earth. You've seen Google level off. Some of the other stocks have still creeped up a little bit. There's still a tremendous amount of air in the Nvidia price. So we'll have to see, you have to see where it goes. Overall, moving forward, I think that there were some other interesting factors here. Let me just share my screen,
Go
go through
ahead.
a couple of quick slides. I thought this was interesting. Me, I like to see the credit card balances
Yeah.
because are people using real money or are they using other people's money to spend? And
Mm.
I thought this was just a very quick, interesting chart. Got it off of CNBC. I like to credit the sources.
Yeah.
And the balances are not only back, but have exceeded
Mm.
the pre-pandemic highs. And
Wow.
what is this really telling us? That means, yeah, all the free money that was out there. Yeah, people have jobs, but
Mm.
they're spending beyond their means.
Well, they're spending beyond their means and they've gotten hit by inflation and they want to keep their existing lifestyle the way it's been. And the costs are 30 or 40% more.
Yeah,
And it's going to come back to bite people.
yeah. It's going to keeping up with the Joneses. So if people are spending, what are they saving for retirement? Here's another one. This is sad. Now, I
Yeah.
know these numbers have been up over the last 5 years,
Mm.
but even you and I talk to a lot of people in their 50s, maybe even early 60s that are now can see the light of potential retirement and they have less than $100,000 saved
Yeah.
and they're making over $100,000 a year and they want to maintain their standard of living.
Yeah.
Not going to happen.
It's,
Not unless they put away a crap load of money every single year and we get some serious movement over the next 10 to 15 years in the markets to possibly even get to that. Obviously, we'd all know that the earlier you can save, your money's going to compound and work for you over time. But just these 401k balances are disturbing for the under 55 crowd that's out there. And then I thought this was interesting, kind of riding the wave of AI. Where can AI really do most of the heavy lifting? We all agree, right? AI is not going to drive trucks around the country, although they are working on autonomous trucks. I don't think
absolutely.
they're going to have the AI, but I think these are
And how is that going to
absolutely,
affect the truck stops? You got AI trucks going around.
absolutely. But not only that, I thought it was interesting on the one on the very bottom is health. Now, I didn't see in here biotech or pharmaceutical, so maybe that's all wrapped into health. I
Mm.
figured that'd be the number one industry
Yeah.
based on all the data, based on everything that we've had for years and everything that all the computers have been accumulating on health. You figure you plug in the symptoms or hook somebody up to a machine to draw their blood pressure, you name it, look at that person's history. The AI should be able to kind of
Yeah.
come up
It should
with
be the
some pretty
no-brainer in that
good
area. Yeah.
hypotheticals on either your condition, what could happen to you, and all that other stuff. So I figured that would be number one. But absolutely, I think we both agree that banking, insurance, and software are right up there too.
But it's interesting that I think from the banking perspective and the insurance perspective, I think a lot of that high potential for automation is in the, okay, how do we market to people and get them to do things from an AI perspective? And it's interesting to me that the thing that probably could benefit from it the most, health, is the most resistant to using AI. But it would be very simple to say, okay, let me take all this data and then pull that data off and give me more information or give me information that I could use. Because I
Yeah.
use AI every day. I use Chat GPT. I've even begun to start using the Google version of it. And the Google version's, I would say, pretty damn close to
Yeah,
being as good.
I think they'll end up exceeding Microsoft on
I think
the
so.
AI side. They've been working on it longer.
Yeah. They've been working on it longer. They've got more money at it, and they're more willing to make changes and adjust than Microsoft, which they tend to be a day late and a dollar short to almost everything when it comes to new stuff.
Yeah. Yeah. So it should be interesting to see where
Yeah.
it goes. That's for sure.
On that same point, I think my addition to this today is really one of the things I look at, and this is something that we've looked at on the show before,
Yeah.
is the fear and greed index. And basically what emotions are driving the market. And right now we are in extreme greed mode. We're at the highest we've been in a year ago today. We were at a 29, which was extreme, or it was the fear level. So we were
Yeah.
at fear. We've gone through all that over this last year, and we're at extreme greed. That says market momentum is moving in that positive direction. We're above the 125-day moving average and accelerating. So although I feel a little bit better about the markets right now, and I feel that we've come through some of the tougher parts, we've still got a lot of headwinds ahead of us. Stock price strength has been really strong. It's starting to get there.
Yeah,
The
but you know
market
what? With the
breadth.
stock price strength, though, it's basically been level
Yeah.
since November. So
Yeah.
that's what's trying to tell you. It's the top 8 stocks that's been moving the market. Yeah, the other stocks are catching up a little bit, but if you notice, it hasn't exceeded.
Yeah. Yeah. I know. Yeah. It's exactly it. But this is net new 52-week highs and lows. Okay. So we're just hanging in there. Stock price breadth, I think, is that's starting to move in a positive direction. We've been really since January of this year declining a little bit down, and we're starting to come up, and we're breaking through the point out here that was around 1300
Yeah.
or 1136. We're close to that number today, 1128. I think we're starting to move in a positive direction there. Put to call options, the put to call ratio is at the absolute bottom. You got way more people buying calls than puts at this point. Market
Be a
volatility is
contrarian
at,
to be if a contrarian is really looking at this, they know the script is gonna flip.
Ron, I lost you.
I said, if you're a real contrarian, they're
Yeah.
looking at this going, the script is going to flip.
Yeah, absolutely. And that's usually what happens when we're in this extreme greed level. We're at a point where it tends to something happens and it flips the other direction and we head towards fear. So yeah, I am of that belief too. I think right now we're seeing a little bit of a run in the markets. Anything can happen during the summer, things can change. Remember that more people are out of the market during the summertime.
Yeah.
Although used to be that was true, I think, when you and I were originally in the industry. Today, so much of this trading is done by computers that they
More than
work when everybody
70%.
else is in the Hamptons.
Yeah.
I think the biggest difference is there's a much more chance for volatility during the summers because a lot of these things work off of headlines. And I think what ends up happening is you've got the humans in the room that are rational that will come in and take advantage of these extreme moves and things like that. And you don't see that in the summer. So there is a lot of possibility for some significant volatility
Yeah.
during the summertime as we get to past the Labor Day weekend holiday where everybody comes back.
Well, August is the big Wall Street vacation month, and
Yep.
it's typically where the most amount of volatility is.
Absolutely. I think from my perspective, I'm a little bit more hopeful on the markets right now. I still am very cautious about the economy, but I think we're in an interesting trend where the markets are making a bigger move and it's more stocks that are taking charge,
Yeah.
and the more of them that we have that are up above that 52-week level, that means that the impact from those bigger ones, the 7 or 8 real big ones, is a little bit less on the downside if people start to really shift gears away.
Look, I wish I was a better market timer, but let's
Yeah.
just say we could get ranges correct. I really thought we'd be pulling back now. I'm on record several times with that. That doesn't mean I think I'm going to be wrong at the second half of this year,
Yeah.
where I truly believe we will be in a recession. The
Mhm.
credit is tightening too much. At some point, there's going to be a breaking inflection point with the banks to say, we can't lend out, or if we
Mm.
can lend out, it's very interesting with mortgages. ARM rates are higher than the fixed rates right now.
Yeah.
The banks aren't stupid. They've been losing money for years on a lot of this stuff with the low interest rates, but they don't want to really offer a good ARM rate to people because they know everybody's going to refinance in 3 or 4 years.
Absolutely.
I
Yeah.
think that's a crazy way of doing business, but the banks right now are trying to make up for lost time.
And I will tell you, it was interesting. This is from a personal perspective. So one of my businesses, we have a small outstanding loan with the bank that was a working capital loan when we first got started, and it resets every 5 years.
Yeah.
And the original rate was 5.75%. I just got the news from them yesterday that it's going to 9%. I wish I could raise my prices 100% in a
How
matter
is
of
that even
months.
legal? You got to check that. You got to check your contract.
Yeah, no kidding. Like I said, it's just what's based on whatever the prime rate is. And I'm like, you people suck.
Prime plus
But
four, please.
+4, that's insane. And I'm to the point now, I'm like, you know what? I hate banks. I don't deal with
And
at
I
this
won't go off
point.
on my bank rant.
Yeah, it's just it's you borrow the money so we can charge whatever we want. Okay, that's not reality. And that
This isn't a banana republic.
yeah, and I'm in the position where if I wanted to pay it off, which I probably will at this point, instead of keeping it out there, but not every business owner is. And I'm thinking to myself, if I was a struggling business owner coming out of the pandemic and just now getting back on my feet, and then my banker comes to me and says that they're basically going to double my interest rate, what would you do? If I had a much larger loan, I don't know where I would come up with the money extra out of the business because I can't raise my prices for clients that
I
high.
will tell you one quick story to wrap this up. So I know someone very close to me. Her credit is horrible. She needed a car. She went out. I won't say where she went, but that's okay. She
Mm,
went out and she was looking at a $20,000 used car, a
okay.
good car, great condition. But because her credit was horrible, you're going to love this. It's a 7-year car loan, 27% interest.
Good Lord.
If she holds it all the way to the end, she's going to pay $42,000 for the car,
For a $20,000 depreciating asset.
which obviously in 7 years, that car will be worth less than 8 or 10,000.
Yeah, exactly. So she's not going to even be
Five.
able to, she'll be underwater trying to
He
sell it.
already is underwater.
Yeah. And it'll just get worse over the next 7 years. Yeah.
How this is legal, Jeff, I have no
I
idea.
thought there were usury laws, but apparently not. Apparently that only applies to individuals that are loaning money. It does not apply to registered
It's
banks.
loan shark rates.
Yeah.
Put it this way, the credit card companies have so many lobbyists in Washington that you would think that they, for consumer protection, okay, oh, you want to make more than a regular bank? I get it.
Mhm.
Don't forget too, the other protection that the credit card companies have that the banks don't. You accumulate 20 or 30,000 in credit card debt and you go bankrupt, you still have to pay it. You
Mhm.
accumulate 20 or $30,000 in a credit line or a loan from the bank, you claim bankruptcy, you're discharged.
Yeah.
Why is that?
Yeah.
Why is that? And where are the politicians looking out for the consumers
Mm.
at this point?
They're not,
Hence, another
because
reason why credit card balances are at the $1 billion, excuse me, at the $1 billion level.
and what I don't think people realize is exactly what you said. I'll just keep charging up. And then if all else fails, I'll just file for bankruptcy. Yeah, that's going to follow you around forever. And then they're going to sell if the bank defaults or you default to the credit card company, then they're just going to sell your information or sell your account to somebody else. And then they'll hound you for the rest of your life.
Right.
Now you're going to get collector calls for the rest of your life and it will never end.
Hey, look, by our next podcast, we're going to resolve this issue and solve world hunger. How's that? We're almost
And
there.
I want
We're
world
almost
peace,
there.
damn it. I want world peace.
All right, world peace after we solve
Okay.
world hunger.
All right, we'll
'Cause
deal
if
with
people,
hunger
if people aren't hungry anymore, they'll be more peaceful.
there. That's exactly right. Maybe it's just everybody's hangry, and that's what the problem is. But yeah, so we shall solve that in the next week.
They can't be hangry with that barbecue and all that ice cream, but you
Well,
never
it's
know.
exactly. Yeah, you got the 2,000 hot dog barbecue there for the Juvenile Diabetes Association.
They're going to be
with
in a
the-
food and sugar coma, but that's okay.
Between
That'll
that
be
and ice
peaceful.
cream, we're good.
They'll be peaceful. It's all right.
All right, my friend.
All right.
Folks, thank you for spending time with us today. We appreciate it. And we do these for you. So make sure that you take the opportunity to comment, share your ideas, what you like. And also, if you can, share this with somebody else. Somebody else that would love to hear this type of stuff, share it with them. Yes, we're goofy. Yes, we talk about ice cream, but we also talk seriously about the markets as well. So we'll see you back here on the next Sense of Things.
Stay hydrated.